All right, we are live. Hey guys.
What's up, man? Good to see you
Dude,
again.
dude, it's
Yeah,
live.
likewise.
Yeah, so you're the founder of Gondor, which is you're building the DeFi layer of prediction markets and starting with borrowing against polymarket positions. So yeah, curious what led you to wanting to build out DeFi products on top of prediction markets? Like, was this solving a personal need? Were you talking to a bunch of polymarket whales and they wanted to, more capital efficiency there? Or what led you to this idea?
Yeah, definitely. First, yeah, thanks for jumping in and inviting us to the first place. And as for the idea, I've been into prediction markets myself since 2023. I first got exposed to them when I arrived to San Francisco and I joined this community of rationalists and forecasters in Berkeley who were back then trading at Manifold, which is a play money prediction market here in the US. And I just started trading it myself a little bit, placing some first trades, then spun up a few markets on some events in my life. Saw it as a very high retention product. Everyone around it was excited. Also, I went to Manifest at the first time. This was a conference specified about prediction markets, and early Polymarket and Kalshi teams were there too. So I've met plenty of PM adjacent folks and realized it's going to be big. So started trading myself a little bit first on Polymarket and then like tried some other platforms too, like Limitless, Myriad. I think yeah, there are plenty. And then was running some strategies like here and there, just like benefiting from inefficiencies, but wanted to find how exactly I can like have a strong edge in this space. And in order to do so, I've looked deeply into the architecture of prediction markets. So, say different designs for order books versus AMMs, the ways how to resolve markets, different like Oracle structures. And then I found out that polymarket positions are fully tradable tokens. And this like immediately brought me some ideas which are very much aligned with like DeFi we have as of right now, right? Whenever we have something in crypto which is valuable and tradable, we usually aim to turn it into an asset where you can do more with it than just buy and sell. So that's where this idea of the DeFi layer came from. And then as for lending and borrowing, it's been just very obvious that people are not entering some of the trades they think are EV positive, even like if they truly convinced, but they have to lock up some capital for maybe several months or even several years. They would just pass on that trade, although annualized could be some pretty huge returns. And that was for myself and for other traders I've been talking to in the community. So I saw a need for this lending and borrowing primitive, and we've started building.
Interesting. Okay, well, maybe before we dive into some of the other questions, can you just break down how the mechanism works?
Yeah, for sure. So basically, as those polymarket positions are tradable, we take them out of users' wallets and put them in lending pools where we have the liquidity supplied on the other side in the form of USDC. And then you can just deal with it as with any other asset, right? So same way how we do pool-based lending against ERC20s, the typical coins we have in the ecosystem, we use prediction markets positions in the same way.
And what's like the over collateralization ratio that you maintain? Like, how do people not get liquidated if the market does some weird stuff throughout the course of their holding?
Right, definitely. So, pretty valid question. The markets are super volatile. Obviously, these are derivatives, so we don't even have an underlying asset, which creates some value behind the token, and one goes to zero and one goes to a dollar every time. So, definitely, there is this liquidation question. Currently, we keep most of our info private just because we aren't yet live with the product. We have the private beta we're doing with some of the traders we've been speaking to, but more to come closer to the product rollout. But what I can tell you is that, of course, for liquidations, LTVs, liquidation thresholds, as it usually is with the protocols, and then we, as the designers of this risk management engine, take care of ensuring that we're able to sell out the position at a price which would be enough for us to repay the loan.
Interesting. Uh, so is this something that is like limited to Polymarket, or do you see like the broader prediction market space being a place for you to play?
For sure. So to be completely transparent, I think Polymarket's the only platform right now which both allows for transferability of tokens and also has enough volume and liquidity in the order books for us to make these trades in the first place. Like, just one side note about the liquidation engine. Obviously, there are caps per market, right? So we are not able to be overexposed if there is not enough liquidity in the order book. And if we were to say implement similar design for limitless, I think we're the third one leading this prediction market race. They would just not have enough liquidity there, so we'd have to maybe allow for borrowing up to like $100 per market, which doesn't make any sense. So right now we are focused on Polymarket. However, pretty much any market which allows for transferability of the positions and has enough liquidity is the one we could support. So like say Limitless, we're closely watching them and we will definitely support them once the volumes hit a certain threshold. And then as for, I mean, Kalshi, probably the biggest one on everyone's minds. It's a little bit more difficult with positions being centralized and not tokenized, but we see some ways of how we can take over that category as well.
I'm curious, when you're talking to potential users of this, is getting some leverage kind of the main thing that intrigues them about this, or is it really just being able to put some more capital use across the ecosystem somewhere else?
Right, definitely. So we see both of those use cases prevalent. I think, especially for the retail traders, it makes much more sense to do leverage than just lending, because probably if you have $1,000 in your wallet, you don't care about capital efficiency, right? You just want to be overexposed to a certain trade, maybe in order to like maximize your profits. So yeah, we see leverage as one of the use cases for sure, but we also see some more sophisticated strategies which could be built around this lending primitive, where you reuse the capital in some other markets on Polymarket or completely elsewhere. You could technically buy Bitcoin and have exposure to it, as well as holding your Polymarket positions. However, to be fair in this regard, this type of Bitcoin and Polymarket exposure could already be achieved, because you could first buy the Bitcoin, then borrow against your Bitcoin and put it into prediction markets, which would yield you pretty similar results. So yeah, we see mostly like the PMF for the product as reusing capital into prediction markets, but not necessarily in the same one as the one user deposited as collateral.
Josh, I got excited about participating in a new Polymarket yesterday.
Which one?
The Ryder Cup, baby. It's coming up. It's the first time, I know hockey season's close, football season's here.
We got NFL tonight. Yeah.
We're back, baby. But okay, so clearly you got the bug for prediction markets super early. We're in this new era right now where everybody's hyped up about prediction markets. And I think we start to get even more sort of criticisms or critiques around it and its sort of broader utility beyond just maybe a new gambling venue. I'm wondering if you can maybe highlight the impact or your excitement or where your conviction comes from in building in prediction markets more generally, especially as you think to maybe your earliest experiences and excitement.
Yeah, 100%. So first off, I would definitely not consider prediction markets gambling. I think there's much more to it. Gambling is obviously a PMF, but it's not necessarily the only PMF prediction markets have. So for me personally, I think prediction markets is the best way of creating derivatives on top of existing assets. So we already have seen it with like be pretty much creating simplified options, right? Where users bet on whether Bitcoin price is going to go up or down, above or below a certain threshold. But that's only a fraction of the possibilities. Technically, you can create derivative on top of pretty much any existing asset or existing real world event, right? So just to give an example, currently I'm in New York and maybe I want to invest in the neighborhood which surrounds me. Let's say I pay the rent, so I want to hedge my rent and like just like benefit from the appreciation of the property costs. So what I could do is I could buy the property and like own a piece of it, right? But that's pretty like bureaucracy heavy. At the same time, I could spin up a prediction market on whether the average cost of the property in my certain neighborhood will go up or down, and then just buy the side I want to hedge with and This way, I've created a derivative which would be very complicated to create in any other ways, both like regulatory and I guess just technically. So I see this possibility of pretty much derivatives on anything coming to the space, and both retail and institutional like traders would be interested in this type of product.
I'm curious how you think about the distinction between like perps and prediction markets for use case like that. Like you could, I think my intuition says perps are a better fit for something like that than prediction markets are, but maybe you feel differently.
Right. Yeah. So as for perp, a perp is usually attached to an underlying asset which has a specific price, right? So like in order to pay the longs are paying the shorts or the vice versa. So in order to pay these fees, we want to know what the underlying price of an asset is, and it's very difficult to know an underlying price of, say, who's going to win the elections, right? What would you connect it to? Maybe some polls, but they're not accurate enough. But so it leaves you with uncertainty. So I think it's possible to have perps on top of spot prediction markets, but like just solving the prediction market problem with perps on its own is quite difficult. And also, not necessarily every market needs to be a perp, just because perps are perpetual by design, right? We Most of the markets we see have an expiry date. There is, however, a PMF for a perpetual prediction market as well, where, let's say, if we want to bet on Trump's approval rating going up or down, this could possibly be achieved with a perp, because why would we expire this market every week and then like restart it if we could just like run it continuously? But yeah, I think there's PMF for both. And yeah, I currently see the spot prediction markets as a stronger product, but yeah, I would not be surprised if more perpetual ones come into place as well.
Yeah, interesting. Okay, so as you look forward, obviously you're focused very much on the lending product in front of you right now. But what else do you have on your roadmap, or how are you thinking about? You're very purposely, I think, not calling Gondor the lending market for prediction market. So what else do you have up your sleeve?
Yeah, definitely. So I think roadmap wise, we're trying to also keep it private for now, and we have some updates prepared. But just to give us, give you our reasoning, we think of those prediction market products as derivatives, as financial assets, and pretty much whatever there's out there existing in TradFi or DeFi for financial assets, which enable people to do more with them than just buy and sell, is what we're aiming to do. So we want to bring more functionality to those tokens. And you could imagine, like, just by seeing what analogies there are out there, but there's plenty of things you could do.
Maybe last question quickly before we let you go. I'm curious where you see the big opportunities in prediction markets today beyond the DeFi layer opportunity you're running at.
Right, for sure. So first off, I think it's a bit too late to create a new prediction market. There's so many competitors and the space is saturated. I haven't seen that many true innovations which could like be a competitive edge. So it could be that you'll like create a new prediction market which would be very much focused on a specific topic. So like say the one for artists on Spotify, or the one for some specific geography like maybe Southern America. I've seen people building around their cultural differences. But yeah, I think the opportunity lies into coming up with more of different primitives on top of those prediction market platforms. So I saw people building different trading terminals and dashboards and all the other infrastructure traders would use. So I'd say this is a much stronger bet in our perspective. And we also see some of more non-retail institutional interest, which I wish I could talk more about. But TLDR is that probably hyper gambling will not be the biggest PMF of prediction markets.
Arsenii trying to hold off the insight from us. All right, man. Well, appreciate you jumping on and giving us an insight into, I guess, the world that you see ahead for prediction markets. And sounds like we'll have to check in with you in a couple of months so you can share more of the details.
Of course, would love to.
Thanks,
And
Arsenii.
thanks for having me.
Of course, man. Peace.
Cheers.
All right, talk soon.